All right, guys, welcome to this episode of the Blueprint Podcast. This episode is called Blueprinted, and I'm very happy to be here with my co-host, Rory. First ever episode as a co-host.
Yeah, this is the maiden voyage, eh?
Absolutely, man. Could be the Titanic, like you said this morning, but
Yeah, it's single swim.
we'll see how we go. Nah, super excited. We're lucky enough to have Jono here, our resident KiwiSaver advisor. The reason why this episode's so exciting is because we offer a variety of services here at Blueprint: mortgages, insurance, and KiwiSaver investment solutions for our customers. Jono's got such an interesting story as to how he became our KiwiSaver advisor. Rory and I just here to learn and listen and let our listeners know what great work you're doing for our clients. Thanks so much for coming on. They're going to learn very soon all your achievements, but obviously you've been an investment advisor for many years, managed some pretty big portfolios with some big banks, but we're going to crack into that very shortly. So, mate, thanks so much for coming on.
Excited, ready to get into it.
Awesome.
Yeah, no, it's brilliant. Guest number one, and it's awesome to have somebody in the house to start things off. So I suppose just to get to know you a bit, Jono, and the listeners, give us a bit of an insight into your beginning and your lead into finance and how that all came about for you.
Yeah, sure. So for me, I actually just fell into finance, to be honest. It's nothing I really went for growing up. I was actually really into sports. I really enjoyed my basketball, and that led me to do sports science as a degree at uni. Back at school, I wasn't really an academic type person. I was good with numbers, maths and physics, but outside of that, it was sports science. So that's what I studied. I went away, did some travels, came back, and then I realized, what am I going to do next? So I didn't really have a plan. If I go back to the uni, there was one paper I did in particular. It was Accounting 101. And it was actually about KiwiSaver, which is funnily enough. And that paper was the one I got the best grade in, and was all about KiwiSaver.
Foreshadowing.
Yeah. So in a way, it chose me, and I think I'm meant to be in this space. I'm good with people. I like chatting with people. I like really helping people. And I think in finance, that's a really powerful way to do that. In order to achieve my goals, I get to help clients achieve theirs. And I think that's quite empowering.
100%.
Yeah, so that's how it came about. I applied for a job at ANZ. That was the first job that I took up. It was a call center job. At the time I was working at Pack and Save. I was trolley boy. Didn't really know what I wanted to do, but going back to my Accounting 101, finance, numbers, people, was I'll just apply.
Yeah.
So yeah, I applied. I went to the interview. There was 3 of us there on the day. And they went through a bit of a role play. I had to pretend I was a banker for the first time, which was quite scary and intimidating.
Yeah.
They gave me the scenario, and I had to come up with solutions. I had to pretend that I was picking up a call. So I picked up this call, and I actually took my hand to my face. I brought it to my face, and I was like, "Welcome to ANZ. You're speaking to Jono."
Yeah.
Wow. The interview people just started cracking up.
It offered you the job.
I was literally going to say, it probably got you the job.
But I actually left, and I was like, man, I'm never coming back here again. I was like, they're laughing at me. I clearly blew it. And I got the call back. I came back, and apparently they hired one out of the 3, and it was me. The other ones were definitely more qualified and had more skills and experience, but I think maybe I connected with them quite well and jumped into the banking side.
It's a good place to start a career in finance, the bank. A lot of people get a leg up in the banks.
Yeah.
And the call centre is one of the perfect starting points. How did you launch from there and evolve in the bank?
Absolutely. The banking side accelerated my learning curve. When I was at uni, I racked up all this debt. I was spending money to learn.
Student loan or other stuff.
But yeah, that's probably why it took me 4 years to do a 3-year degree. But I managed to get there in the end. I viewed it as a learning centre. Now I was getting paid to learn. Being in the contact centre.
That's super powerful.
Yeah, real powerful. Like I was able to take hundreds and hundreds of calls all across the country. The initial role was just general banking, understanding general products. And then it moved into lending, so outbound, inbound, calling, home lending. Started to help Kiwis get into their first home through property. That's when I started to learn more about equity and leveraging property to build your wealth. I was able to help Kiwis do that. At the time, to be honest, I didn't believe that I could buy a home.
Yeah.
And a lot of Kiwis out there probably feeling the same way. But by actually being in the industry and learning these things, I was able to create a plan for me and my partner to buy a home. And I think just that knowledge from the banking end and helping clients was real empowering.
Change of perspective, eh?
Yeah, dead right.
Yeah, absolutely. And then from there, I moved into business banking, did business lending, so helping small to medium-sized businesses as well.
Yeah.
Which was super challenging. I did that during COVID.
Yeah.
And there was lots of clients going through difficult times. Basically, everything I learned was scrapped because now it was all judgment lending. I was like trying to help people in need who are struggling, going through a tough time. That was a difficult time. But yeah, I did about 5 years lending-wise.
Wow.
Learned heaps, really passionate about it. And then I decided to take another challenge and pivoted into private wealth. That's where I started to learn more about markets, how monetary fiscal policy works, and how the different asset classes work. And then, I was just getting real fascinated about all of it. And I was like, I was like a multi-universe. Yeah.
That's incredible.
And in terms of getting into wealth, I imagine in the bank you would have been young for that area, which is a bit of an old boys club. How did you go slotting into that environment? And was your age a barrier or not?
Yeah, great question. It did become a barrier, but there was still a period where I was able to learn underneath advisors because there was just so much to learn. I was learning this while there was a COVID crash. Portfolios were going backwards, share bond markets were going backwards, and I wasn't even ready to be a front-facing advisor. I was lucky to work under experienced advisors that are much older than me with a wealth of knowledge and basically coach me. And that was really cool. I managed to do my studies. I got a whole lot of experience working with high net worth individuals, trying to grow their wealth through active management. It did get to a point where age was a factor. And so just the nature of the clients we were dealing with being more towards the established wealth.
High net worth.
High net worth, senioring, old money.
They've sold their businesses, they've cashed up, they've sold their properties, they've got all this money. And I guess it's really hard to talk to a really young person about finance when they've lived much longer than me and probably seen a lot more than myself. And
so do you think your age was something from your colleagues that they were saying is a barrier, or did you get that feeling from the clients as well?
I don't think it was from the clients. I think it was just more the look. ANZ Private Wealth. It makes sense to make sure that you've got someone there that has all the certificates, has all the knowledge, all the experience, that is handling that pot of money. I ended up deciding to pivot away from banking, and a bank really helped me with that. They supported me. They said, "This is a really good move, just to get that experience." So I worked with a specialist investment firm called NZ Funds. They took me on, and I was eager to learn. I learned so much from being there. I was overseeing a portfolio of 400 million of Kiwis funds.
That's a lot.
So it was just having those conversations, but being that main advisor that the clients could lean on.
Absolutely. I think going back to what you said initially about your first call center job, that's really profound. And I think it ties into a lot what makes a successful financial advisor. You said getting paid to learn. I don't think I've ever heard anyone say that about a job before.
That's right.
And I really think the successful financial advisors have such a genuine, keen interest to learn about people and learn about how they manage their money so they can give better advice. You're talking to people all across the country. You're talking to people in Auckland, regional New Zealand, farmers, industry workers, and you're learning how much they earn and what their financial future looks like. You can give them really informed advice about where they're going financially. You know what their career range looks like in terms of max income earning, and you can give them some really sound advice. Your ambition to keep learning throughout all those years you spent at the bank and NZ Funds is what sort of turned you into the advisor you are today, where you really know your stuff.
Yeah, that's correct.
Yeah.
Honestly, one of the main reasons why I went into private wealth is I wanted to learn how these people acquired all this wealth.
Yeah.
How did you
get there?
It's something that I don't know. If I was to go back to my own sort of family, like they weren't financially well off. Like they had good incomes, but they didn't know what to do with it. They didn't know how to invest, save, grow wealth, things like that. They didn't have the know-how.
So like a medium financial literacy,
So I just wanted to learn how are these people doing it, and then how can I apply that to my own world, and also how can I use this information to help others. That's why I think KiwiSaver is so special. For me, I have a real opportunity to help people get into their first home. I believe everyone should be able to purchase their first home here in New Zealand, but also when it comes to retirement as well, like having the retirement you deserve. A lot of people aren't thinking about it. I'm having so many conversations, and it's the last thing on their mind. KiwiSaver is actually at the bottom of your list.
Yeah.
And for a lot of people, it could be $1 million decision.
Absolutely.
And getting into those conversations, it's life-changing.
That's magic. So you went to ANZ and got paid to do your masters in financial services.
Paid my degree off.
You know, from the call centres to lending to private wealth, and you transitioned to a specialist wealth firm in NZ Funds, managing 400 million overseas. So
Fund managers managing.
So in that time, you've accumulated a lot of knowledge. You've got a passion for the industry, and now you're with these Blueprint Finance guys.
Crazy, right?
A boutique. How did you end up from the big commercial to an advisory business like Blueprint Finance?
Cool. I think for me, I'm always trying to put myself outside my comfort zone. It got to the point at the bank I was starting to get a little bit too comfortable. That's why I pushed the investment specialist role. And then coming here, I'm noticing now the conversations are even deeper because I'm not limited to any one provider. I'm no longer handcuffed. I can literally give advice that's tailored to each client. I can make sure that the advice that I give does meet their KiwiSaver preferences, their goals.
Yeah.
It matches their risk tolerance and what they're trying to achieve and how they're trying to get there.
Yeah, because although every KiwiSaver provider has their own conservative fund, growth fund, aggressive fund, they are all slightly different and they're tailored to different goals. A great privilege for us in New Zealand is that you've got so many options, but that's why you have to go even deeper because you can really pinpoint what a client's objective is and then what that right fund is, right?
Yeah, it's crazy. There's 38 providers, which is massive, like 10 entered in the last sort of 10 years into the market.
Yeah.
Some have gone, there's a few acquisitions, things like that, but KiwiSaver is one of the fastest growing sectors of finance.
Yeah.
Like it's really growing really
It's
fast.
got to be the fastest, surely.
Absolutely. And I would say in the next sort of 12 to 13 years, once KiwiSaver's been around for 17 years, the average KiwiSaver balance will be $100,000. And I think at that point, that's when people are going to start to wake up and go, hold up. This is actually quite a lot of money here. This has now become one of my biggest assets. What am I doing? I might need even more specialist advice. So those that are getting the advice now and getting them set up now will have much higher balances come 10, 20 years' time.
There's so many options out there, right? With KiwiSaver, it can be viewed as almost like a set and forget because it is like building wealth and investing, and particularly KiwiSaver where it's locked funds. It's a long-term game. With so many options, the value of advice is critical. We were talking about the wealth gap and the 30-minute, $500,000 conversation. You've got an example of a client where your advice makes a huge long-term difference to their wealth.
Studies have shown that working with a financial advisor does lead to better outcomes. And this isn't a pure example. So this client during COVID switched from a growth fund. They were at one of the banks and moved to a conservative fund.
Why did they switch?
The main reason the markets were falling, we had a decline of 30%. Obviously, COVID happened, borders closed, but businesses had to close their doors, lots of uncertainty.
Of course.
And markets don't react very well to that. Share markets dived. That was probably the first time for a lot of Kiwis where they started to realize that this KiwiSaver is not a savings account, it's actually an investment. KiwiSaver is probably not the right real name for it because it's not a savings account, it's the value of the assets you own. So this client switched to a conservative fund because they thought that's the right thing to do. I want to protect my money. Fair enough. This client's really busy as well, so really busy, working really hard, has very high-end role.
Yes.
And so KiwiSaver is, again, one of the last things you want to think about. But big balance, six-figure income, so quite meaningful investment. It's been 4 to 5 years since that COVID dip. And what we've seen is that markets have fully recovered. And that's what generally happens. Markets do go up more than they go down over time. Share markets have been around for over 100 years. And that's been a reliable way to build long-term wealth. I was having a chat with this client, and one of the first things is just making sure you're in the right fund. Conservative is definitely not the right fund for this person.
Yeah.
And so I got into that conversation. But one of the providers actually has this chart that shows the differences between if you switched at COVID, if you stayed invested and stayed the course, versus if you stayed invested and contributed more.
Yeah.
The person that stayed invested and contributed more grew a lot faster.
What the tip? That's
Yeah,
what the
right.
tip.
And the ones that switched were worse off financially.
Yeah.
There's reasons for that. Obviously, you're switching away from growth assets like your shares, listed property. So these sort of assets go up and down quickly. if you're selling those investments, you're crystallizing that loss. So you're making it permanent. You're moving away from growth assets, which are considered more riskier, to more stable conservative investments like cash and bonds. These investments provide income through interest or coupons from bonds.
Yeah.
So when the market fully recovered, these sort of assets don't reflect that. So that's why the client missed out. One is when I have this conversation, it's really educating the client around the investment. But the powerful part was, because KiwiSaver's been around for a long time, this client was in a conservative fund over the last 10 years, has done a 4% return. This client had around 250,000 in the KiwiSaver. I talked to the client about the rule of 72. I use it as a bit of a guide. But basically, there's two inputs, time frame and interest rate. I said, okay, 72 divided by 4% return in a conservative fund. That takes 18 years for your funds to double in value. The crazy thing is this client had 18 years to run to 65. So it's like almost the perfect scenario. It was crazy.
Yeah.
And then
that's her investment horizon.
That's her investment horizon. And that's still 65. And you got to remember, 65 isn't the finish line. You still have 20 to 30 years in retirement for the money to last. So that's a whole other conversation. But by making sure you switch to the most appropriate fund, which is, in this case, once I've done the risk profiling and had a chat around how the client feels about risk and risk capacity, the growth fund is typically done around 8% after fees, after tax, if I was to round it down. So 72 divided by 8, that your funds double now in 9 years. So you go from 250 to 500. And then from 9 years, doubling again, takes you to 18 years. Now you're at age 65, but your fund balance goes from 500 to 1 million. When I said KiwiSaver's $1 million a decision, for a lot of Kiwis it is.
100, yeah.
And I'm not even factoring employee contributions, employer contributions, government contributions. That's purely investment returns. This client may have missed out on $500,000, which is crazy, right?
And it's easy to change funds, but the impact is bigger than the ease of which it is to make a decision like that. And markets react to news, to good news and bad news. It's an emotional thing for people when they see their retirement dipping.
Yeah.
To then go and make a decision on their own without getting advice. The moral of the story is don't make those decisions without someone in your corner. I think that's the value of Jono in your corner. He's a mobile phone call away. You stay the course. You need someone to say, hey, stay the course and actually,
hold the line.
Actually put more in. It was the best outcome.
You were right. We're driven by emotions. We're human beings. If you look at behavioral economics, we don't view gains and losses equally. What I mean by that, flip a coin, heads or tails, you earn $100 or lose $100. Most people wouldn't take that bet.
Yeah, for sure.
Risk return, it doesn't make sense. It's only when you get to about $200 to $250 you win, tails you lose 100, that's when people start to take the bet. So when people see their funds drop, it actually hurts. It's twice as painful as the equivalent gain. And that's the crazy thing. Just purely on emotions, people can make knee-jerk reactions based on long-term objectives. That's why I always make sure you touch base with the advisor so that we can make sure that this is a long-term objective. You've got easily 10 to 15 years plus to run. You can ride out short-term volatility. Markets take on average 3 to 5 years to fully recover. Sometimes it takes longer, sometimes less. Yeah. But you've got the time. And you can benefit from purchasing these investments at cheap valuations. Stay the course. This is the financial education piece that working with an advisor, you'll be able to learn while you earn. It's very hands-off KiwiSaver for a lot of people.
As a guy who's made countless poor financial decisions, going back to that client with that COVID switch, I know so many people who did that. I'm not a KiwiSaver advisor, but I was in touch with my mortgage clients at the time, and they saw the balance dropping and they switched it. But then for their fund to not even reach out and have that conversation because they didn't have an advisor, that's really tough, right? Because that's a painful learning now for the client. They'll never make that mistake again, especially if they're still in that growth stage of their KiwiSaver journey under the age of 55 or 60, depending on their goals. When you look at an aggressive growth or active growth chart, it says 10% return, right? It's trying to get a 10% return minimum. That's factoring in massive drops from things like natural disasters, pandemics, global conflicts. That's priced in. So it's designed for you to remove the emotion out of it. And for that specific client, she's super stoked to be signing up now, and thank God that she ended up meeting you, because how many more years would she have just gone on the conservative?
Oh, don't know.
That's the thing, yeah.
Missing out. The information we give today is general to certain situations. Obviously, seek advice for your personal situation. This is not financial advice. For example, Dan, when you were talking about COVID, there was a lot of clients that were looking to purchase property during that time. Markets fell 30% and they lost 10, 15 grand of their KiwiSaver, which was their deposit.
That's right.
And because they didn't have an advisor or someone to lean on, an advisor would have made sure that we protect your deposit.
We're in a defensive or a cash fund. Yeah.
There's 5 different funds, and so we want to switch and make sure you're in the right funds. The right move was to try and protect the capital there. But those that have a long time frame, it's about growing the capital as much as possible.
Yeah.
You can't achieve a fully funded retirement without investing in growth assets and taking some risk.
Absolutely. Yeah.
But it's all personalized to your goals. It depends on what type of return you're trying to achieve. It's not all about trying to get the highest return and taking the highest level of risk. If you only need a risk return profile that might achieve 4 or 5%, let's go with that. There's no need to take any more risk. Why take the additional risk when 4% achieves your goal? So it's all tailored.
There's a time and a place to be conservative, aggressive, or balanced, depending on your stage of life. We've been talking about market factors and how they play on emotions, decision making, and advice. So I should sit across from you or behind you on a day-to-day basis, and you talk about LVRs and OCRs and
buzzwords,
DTR, interest rates. Yes. That's a landscape that's changing. And how does that influence you and your advice, and how does it influence your client and what you do on the mortgage side of things?
Thanks so much for asking. You were saying there's a time and place for every KiwiSaver model, the conservative or the active, but knowing you're always aggressive. Aren't you? So, yeah, I was going to be that
Chips
aggressive.
on the table.
There should be a seventh. Oh, no. Well, it's called Bitcoin, I think. It's called the hybrid.
It's called fully in crypto. Yeah, exactly.
Yeah, we had a poker night the other week, and this guy took all the chips home. He probably went all in most of the time.
Yeah, exactly. So he's doing the same
doubling
thing
or
with
nothing.
his KiwiSaver.
Every underdog has his day.
No, I was just making a joke. Obviously, Rory's got a balanced approach. He's in active growth at the moment, and then we'll peter off to conservative. No, thanks for your question, mate. It's such a good thing to bring up because having lunch with you guys is such a treat because I love learning about your industries. I'm not an expert. I know a lot about insurance and I know a lot about KiwiSaver. I like to think, but I don't know a third of what you guys know. And that's why I love sitting down, picking your brain and exchanging battle stories of how we're helping clients. I suppose how the mortgages are different, exactly like you guys are saying. We're in the ever-changing landscape. Yours is changing a lot in terms of the markets.
Yep.
And yours is really pretty consistent, but there are some big industry changes every now and then.
Totally. Our biggest changes on premiums. The prices change, yeah. And that actually correlates to what you guys do. When interest rates go up and there's a cost of living crisis, and then at the same time, insurance premiums go up for age. People are looking to pinch pennies somewhere. So there's always actually ongoing conversations.
Can we take less cover? Yeah.
How do we rework your insurance covers?
But I suppose on the mortgage side, keeping up to date with all the product changes from different banks, the OCRs, the interest rate changes, and keeping your clients informed.
So Dan, we've talked about our different disciplines. I actually like to refer to them here as the 3 pillars of financial success. Your wealth, which we've touched on, your house, which is incredibly important, and health as well. So, or risk protection, as we call it in the industry. How have you found having KiwiSaver insurance alongside you, and how's that synergy between what you do in terms of financing and risk protection?
Honestly, it's an absolute blessing to be able to be in a position, especially with you fine fellows, to provide those services as well, because I've been in quite a while in the game. You guys would know my whole career I've been an advisor. 9 years ago when I started, it was a very long time before I established any sort of genuine relationships where I could be able to fully cover off a client on the insurance and the investments as well. And it's crucial. It's absolutely crucial because although they might seem unimportant, especially on the KiwiSaver, people can't see the vision yet.
No.
That we can see for people in their 30s, how big some of these balances are actually going to get and how important they're going to be to supplement your super when you get to retirement age. And also on the insurance, it's just the most important thing because not only is it a conversation that we really want our clients to have, it's an obligation. If we're sorting out a client's mortgage, we're getting them the best possible interest rates. We're giving them really good advice from the loan structure. That's a third of the job, isn't it? They've got the mortgage sorted now. the mortgage is pristine. I put a bow on it, it's done. But you're taking on a lot of risk now. You're in a position where your financial obligations have changed. You're committed to paying rates. You're committed to paying this mortgage. That's a privilege to have a mortgage. You're going to pay that off, and you're going to pay the house off. Then you're going to have a house for your family. That's an asset that's going to appreciate over time. But if that doesn't go right, we need a backup. We need the KiwiSaver and the insurance. It's a natural bridging of the conversation to have you guys come in with that check-in. Obviously, it's an obligation on the insurance side. And then it's
an obligation, right?
Yeah,
you,
it's an
you
actual
need
obligation.
to have a discussion with your clients
Yeah.
about risk protection.
We're taking on an $800K mortgage. What's your plan if you can't pay it? My parents have got $1 million in the bank. Sweet as. For me, that's not the case. And I'd say for 99% of Kiwis, it's not the case. So let's make a plan. We had a recent client. It's very common. Pretty much all our first home buyers have a chat to you guys, even if they're clearing out their KiwiSaver, especially if they're getting their first home. Most of them don't have any personal insurance, especially ones without kids. And just them being able to have that conversation openly and candidly with someone like yourself, no obligation, just understanding what role insurance is going to play in their life. Because even if they don't take a policy with you right now, I guarantee you once they have their first child or once they get 3 or 4 years down the track, they're going to know, hey, I actually need that medical insurance because if something happens to me and I need some serious help, like there's no real plan. So it's super, super rewarding. But for me, it's more so it's like a relief to have some really competent guys there helping with those products.
And when I speak to your clients, there genuinely is no obligation. It's a discussion and an education. You need to say, hey, it's time to have a conversation about life or health insurance. But when they have that conversation, it's not compulsory.
No.
So that's a misconception, actually. And often it gets put upon people that they need to have life insurance to take a loan. They think that they do, but they don't. The bank will require you to insure your home.
That's right. That's it.
They want to protect their asset protected. But
in many countries, it's an obligation to have personal insurance if you're getting a mortgage. And in some states in Canada, you actually need mortgage protection insurance.
It's a very soft and educational approach to the advice that we give. It's really important that the personal risk protection is for the client. So that if they have a hiccup along the way and are off work for a period of time, they can maintain their mortgage obligations and keep the roof over their head.
Yeah, dead right.
So it's not for the bank. It's for your partner, it's for yourself, it's for your kid. That's why you take personal risk protection.
Obviously, medical is always pretty good. But I suppose that just segues into talking a bit about the value you've added here in the office. It's been great having you in, servicing these clients. How have you found going from being an independent advisor to being the blueprint cornerstone of the risk protection side of things?
Well, I've loved it, to be honest. It's been fantastic. In my brokering career, I've always tried to align with like-minded mortgage brokers because buying a home or refinance is one of the big triggers for having insurance. That goes hand in hand, those relationships. But there's a big difference to being under the same roof and colleagues, one team, one dream. There's a certain amount of efficiency that comes with it. We share similar information and know each other's clients, whether I'm referring you a client or Jono's referring me or you referring Jono, whatever way the information is flowing, we've all got the same data. And that makes for a really good client experience. You've also got more touch points. So you have your 6-month, your 12, your 18-month refix review. You've got your annual insurance review, your annual KiwiSaver review. There's a lot of touch points. So there's a lot of opportunity for clients to put their hand up and say, hey, I need to do something. I need to change something around my finances. And lots of time people don't get that. And they drag the chain a little bit. It's too hard. I've got to go into the bank or call the insurance company, whereas we're text message away or an email and
not stuck on that.
or the client talking to you about their refix because that has to happen. Sorry, talking to you, and then they mention to you, I need to sort out my insurance because of this. And then you
hang on.
Exactly. It's awesome, mate. Everybody in this office is like-minded and it's a client first approach.
Similar values in life stages as well. That's the most important thing for me, I think, is that everyone's got the same values in terms of how to deal with a client. Like I can guarantee you if you put any of these advisors in the same situation, they'd all play it the same way.
And the client's getting a similar experience and a similar level of service across the board,
Dead
which I
right.
think is really cool. And we do have a bit of a success story from today. A
Oh my
client,
gosh.
a client called Mr. G.
Yeah. He's a client, but actually all happened today. This is going to be one of many case studies. And here at Blueprint, look, we're not breaking the mold. We're not doing anything new. We're just giving really good financial advice.
Yeah.
But we have invented a new word. All right. And it's actually I suppose it's a past tense word, isn't it? About someone or something that's happened to you. And Mr. G is a client of ours, and he's been blueprinted. You're wondering what that means. It's super important to us. It means it's a client that we've met through the mortgage. We've refinanced him. We set his mortgage up. Really happy with that. He is. And he's actually said, look, I've gotten an off-the-shelf policy, insurance policy, online. I thank God you mentioned something because things might not be set up properly. Refer him to a chat with Rory. Tell us a bit about your relationship with Mr. G.
It was a smooth process. One of the great things about working as a team under this roof is the trust that the client builds up, which this particular client had built up from the lending team.
Yeah.
They came to me already having had a good experience. It was a really smooth process. The guys collected the insurance, the existing policies, set up online, and they came off the back of this particular client actually leaving his role where he had insurance.
Yeah.
And then I think he copied it through work.
Yeah.
And then I think he went online and copied and pasted his benefits and got himself covered, which some of it was good for the purpose, but there were some gaps and there was some bit of a quality issue in some of the products. So we reviewed it and took him through an advice process and showed him the difference and set him up with this new policy. It was super streamlined because we're sharing information. So
With his consent, of course. Like he's
with his consent, of course. Yeah, that's right. And so, no, really good experience for him. And off the back of that, I said that we had a fantastic KiwiSaver advisor.
Oh my gosh.
This guy. I knew about his investment side of things and not just New Zealand, but some international stuff. So I was able to myself have a bit of a conversation with him.
Yeah.
And a little bit of knowledge that I have from Jono because I sit side by side to him.
Yeah.
And
You're like a sponge on him, eh? He's
absolutely.
Just,
I'm learning lots from you too.
He was very keen to talk to Jono, who put the final blueprint stamp on him, basically.
Yeah.
Oh my God. So the finale, tell us. You must have felt a bit of pressure on yourself. I've got to complete, because when something like this in the office happens, everyone's talking about it, eh? It's the coffee Makona machine. And then everyone's saying, oh, we're going to get the blueprint.
We're going to get the trifecta.
Yeah.
Even Mr. G was equally as excited because he just thought, like the idea of a one-stop shop. He was loving it because we were thinking about your insurance policy. It's the KiwiSaver, but we're like, let's get it sorted. Let's make this the number one thing for 2 weeks, and you never have to think about it again.
Yeah. Now we protected his wealth, and now we're looking to grow it.
100%.
That's the goal. Having a conversation with Mr. G, fascinating person,
Yeah.
super onto it. We didn't actually change the provider or the strategy.
Yeah.
But just having that conversation around, are you in the right strategy for your goals? Making sure we did the risk profiling, KiwiSaver preference questions, and found out that this provider works really well. I did come up with some other options, but it's something that we can have a discussion with. So moving forward, I think what's really intrigued him is we're going to get in touch every year. I'm going to do quarterly updates because he's quite busy. He doesn't keep up with markets, but he wants to know what's going on. So quarterly updates, video, newsletters, making sure you're not missing on the government contributions, making sure that you're on the right PIR rate, all of these things, hygiene things to make sure that everything's working smoothly. Yeah. Over time, your risk tolerance can change, your goals can change. KiwiSaver is becoming there's a lot more things you can do now. You can customize, you can go multi-manager approach. So never know, your goals could change and there might be something out there that's better fit, but we'll keep in touch.
Yeah.
And we're helping with the Aussie Super Transfer.
Yeah, that's brilliant.
Yeah.
That was cool. And it was an intelligent client. Like he was pretty switched on, like you said, busy, got a family, he's got a busy role, but made the time to have the discussions with each respective team member and soaked up the information and appreciated the advice and trusted the process. It was really smooth and efficient for him and for us. It was good.
was real good. I'm looking forward to helping more clients.
Yeah, absolutely. Even with Mr. G, I actually didn't write the loan. I didn't help him with his mortgage, but our teammates, David and Jack, got him sorted. This whole process is so interesting because they almost missed out.
Yeah.
And he was previously helped by an advisor who was in a circle of friends. We obviously would never talk down an advisor, but from Mr. G's words himself, he wasn't getting the service that he needed, right? And with any service business, if you're not getting the right service, you should leave. We almost missed out on helping him because of loyalty, but the way those boys worked to provide him such a good offering and take care of him and say, look, this is going to be us for the years to come. He obviously worked with us because the savings was there. To think it went from that to almost not working with him to him being a fully blueprinted.
The first blueprinted client.
Yeah.
It was nearly the one that got away.
Jack was walking around the office in tears, playing Michael Bublé, thinking he'd lost his deal. But thank God he didn't. And I'm sure next client event, Mr. G will be there and we'll get a picture with him and it's just going to be a very happy time.
Hopefully. Hopefully could bring him in for an interview.
Yeah, 100% get him on the potty, eh?
Yeah, absolutely.
Jono,
cool.
This has been such a cool chat. And this is definitely not the last time that Roy and I are going to have you on because your insight into KiwiSaver. Next question, Roy.
No, I'm not the basketball guy in the office. Look, mine with LeBron James. Who's the GOAT?
I might lose some clients or friends, but honestly, hands down, LeBron James.
Controversial, man.
I've been following the Olympics. The guy's turning 40 years old.
And he's not slowing down.
And he's still the best player.
Do you think he was the best player on that team?
Best player, absolutely.
Yeah.
Absolutely. He was close to triple-double,
Yeah.
getting everyone, facilitating everyone, rebounds, blocks, getting the charges.
So it's not even a debate.
No, not even a debate. I've been following LeBron since he's been in high school. I just think he's a massive talent. I think a lot of us will miss him when he's gone. So I'm hoping I can go over and see him. For me, it's LeBron, bigger, faster, stronger, better.
I think there's always someone else that's going to come along. This is a big misconception that people get this idea of being irreplaceable. And I don't think anybody is. You could have said that about MJ. And then look at Michael Jordan. Like, there would never be another Michael Jordan.
Moving on to real estate investment mindset. Our clients love talking about this. Long-term holds or short-term property trading? What interests you the most?
For me, it would be long-term. That's where you're going to grow the wealth. If we're thinking about doubling your money every sort of 7 to 10 years, that's what property's done. The growth rate might slow down. That makes sense. But short flipping is short money, but there is some benefits to doing that.
Yeah.
You know, if you want to get some quick money, raise some deposit to buy your holds, it's a good strategy as well. So I'm looking forward to doing both.
Yeah.
Slow and steady wins the race.
100%. Onto the most contentious subject. Favorite takeaway, Indian or Chinese cuisine?
Far out, I don't discriminate, eh? A bit of both. I'm a seafood diet man. Like I just eat anything.
Seafood, I eat it.
Man, you guys had some cookies here today. I was munching away.
I'm also on a seafood diet. If I see food and it's a fish, I eat it. Oh, yeah.
Funniest finance podcast on the market.
Dude, I am incredibly doubtful any of our clients or listeners have made it this far. And that one's just for us.
True. Honestly, if I was to answer that question, nothing beats a butter chicken. So, Indian.
Yeah, 100%. I'm a huge BC fan as well. I've had the real thing in India, but they don't make food like they do in New Zealand, eh? Quality of food here is just incredible.
I want to do a podcast on your travels in India.
Yes, definitely. That'll be the 100th podcast. Last question. This is Rory's favorite question, and I really like it too. What advice would you give yourself 10 years ago?
Knowing what you know now.
I'll be 21. I'd be in uni, left school. I think for me, knowing what I know now is don't believe everything you read. Think for yourself. And one of the big things I'm starting to realize more and more now is having the right people around you, the network. I even talking to my family, they had good jobs and things like that, but if they had the right people around them and provided that advice like we're doing today, like how many people will help me, how many people will be better off, give 10, 15, 20 years in the future, they're going to be super stoked, super happy because we're setting them up.
100%.
So for me, having the right team and having a plan and working the plan, and this is what I learned. I quickly jump and have new ideas all the time. I just need to stick to something and just go at it. See it to the end And that's what I'm looking to do here. Help as many kids.
Find your niche and then just go all in.
Yeah, I just wanted to comment on that because I think a lot of younger people, young men or women, we don't actually have a plan. We don't have a mentor. We don't have someone necessarily telling us how to walk those steps, but they're having a plan and sticking to it and thinking for yourself, I think, is massively powerful. And that's you mentoring your 21-year-old self there.
You don't need to know everything. You got to leverage your networks. There's going to be things I know that you don't. Get on the phone and start talking to your friends, see what they're doing, what they're thinking. I constantly send stuff to people and go, give me your thoughts, especially people that think way different to me.
Yeah, for sure.
Because every time I look at something, I think I'm right until I get another opinion.
And that opens up another can of worms.
The reality is the answer's somewhere in the middle.
Yeah.
If we can get as many people in a room, talk to as many people, the answer will be somewhere in the middle.
Jono, thank you so much for joining Rory and I
excellent.
this evening. Seriously, it's been such a treat. And yeah, look, this isn't going to be the last time you've been on. So thank you so much. We're going to end off with a 2011 Rugby World Cup John Key awkward three-hand handshake. One of these. Call it a lead.
Well, that's the blueprints of fist.
Cheers, John.
Cheers, guys.
Awesome, mate.